a lot of us, man, don't understand the significance of making money and how to make money on Wall Street. You do. Talk about your interest in stocks, bonds. Tell the people what made you get involved with investing.
My dad introduced me into investing. Had no knowledge of what candlesticks and how to look at a chart or break anything down.
Candlesticks are in a chart?
Yeah. So candlesticks are what we read to be able to determine what position we want to hold or how we're going to execute a trade. They're the primary indicator that we have for price action. And it shows the relatively an amount of predictability and setups. And the setups are basically several candlesticks in a row that give us more insight as to what direction the market wants to head.
So you're a barber.
Yes, sir.
When do you have
Thank
time
God.
to trade?
Well, okay, so the beautiful part that I found about trading is that there are opportunities throughout the day. So I like to get it in the mornings and then in the afternoons, sometimes intraday. You really want to put your focus on it. This is something that is a craft. It's something that can change your life. I do it and I intend on doing it as a primary occupation once it takes over my barber. I just want to tell people, most of the time when people are fearful of something happening with the stock market, it's the best time. Warren Buffett.
The market being down is a good thing. It's excellent that the market is down because stocks were so high. People like you and me, it was difficult for us to get in. So what people need to understand, even for their 401ks, your company is investing into a certain amount of money in your 401k every single month. The higher those stocks are in your 401k, the less the company is able to purchase. But when those stocks come all the way down in your 401k, you're putting the same amount of money in the 401k and your company is accumulating more. Right. When the market goes back up, your 401k is going to double or even triple.
Right. Life-changing opportunities come with these crashes.
When the market is volatile.
Yes.
And that a lot of people see that as negative, but it's for a person
for a
like
trader,
you,
volatility
is
fantastic
fantastic because you sell and then you wait till it goes down, then you buy, and then it goes back up, and you sell again.
Yes, sir. There is not an investment or a business that you can get into where it doesn't have factored in losses. It happens. And so the stigma, the taboo that's attached to trading in Wall Street, people are attaching it to gambling. And that's absurd because gamblers might have their little tricks of the trade, but I have so many indicators. I have news, I have catalysts, I have numbers, and numbers to look at, financial reports, and all the things that we use to do our due diligence to analyze these stocks that you can't do when you're simply gambling. So we're not gambling. We don't guess, we don't gamble, we're not anticipating. We react to market movement, price action. I've dropped like 38 trades in the Barbers of Wall Street. I've only missed three.
So tell us about the Barbers of Wall Street. So you got into the stock market. You became pretty successful, pretty knowledgeable, and you decided to teach other people in your profession on how to trade.
My dad bought me some Home Depot stock years ago, and I didn't really pay much attention to it. I saw it grow. And once I saw it like doubled, that's when it really caught my attention that, hey, I want to do this. I didn't do anything to this and it made me money. So I started following this guy that was on YouTube, and he was presenting a lot of good information to us about how to trade, and he was showing us the results. The transparency is what captured me, and I'm seeing people make hundreds and thousands and tens of thousands of dollars in just a couple hours. The most attractive about trading to me is that I'm sitting down looking at a computer. And I can do it from just about anywhere. And all I have to do to be successful at this is learn to be disciplined, read, and pay attention to market structures. When I got the concept of Barbers of Wall Street, for me, it was like, I want to give this gift back. But it's also, we're all barbers. Like, we're retail investors. We're this little guy. And so I call it the Barbers of Wall Street because, everybody knows a barber or is basically, a working class citizen. that we're all just trying to get over the hump. But we can grow ourselves together in a community where we know each other, we're familiar with one another, but so we can teach each other and learn and earn together.
What I like about you is your discipline. You're not trying to get rich on each trade.
Right.
You'll let that trade grow to a certain position, and then you'll take that money off the table. It can be 200, it can be 300, it can be 500. But if you do that enough times, man, you can accumulate a lot of profit. A lot of times I will get caught up in, I'll see a stock and it'll run, and I'll sit there and watch it run, and then say, okay, I just need a little bit more, and then I'll lose an opportunity to take that profit.
I think you have to lose in order to understand the importance of taking profit. If you want to become a profitable trader, the mentality and mindset that you must have is, I'm here to compound my interest, compound my gains.
Mm-hmm.
So for every loss that I take, then I'm giving money back that I won or took from Wall Street. And so I don't care if it's $40. I'm taking it because I've been up 40. Like, I want a little more, and then I'm down 400.
But it doesn't hurt as bad when you take your initial investment off the table, the money that actually came out of your pocket.
Right.
If you lose that house money, it hurts, but it doesn't hurt as bad as it does losing your initial investment.
Sometimes you'll get into a trade and it may go down, but what I'm helping people understand, and what we're educating people on the Barbers of Wall Street, is how to be disciplined in this craft using Japanese candlesticks, reading them, and using indicators.
Now, you talk about using Japanese candlesticks, but for the lay investor or the beginner, they hear the term charts. So the Japanese candlesticks are in these charts that investors use that a lot of people, including myself, have a tough time interpreting.
If you're going to trade, you're going to have to learn how to read candlesticks. It's the very first stage in development and learning how to be successful in this craft. Japanese candlesticks can be simplified. It's either green or it's red. The only difference between a green and red candle is where the price opened. On a green candle is going to be the price opened at the bottom and it closed at the top. All candles represent a time. It can be 1 minute. It can go all the way up to a quarter, 90 days per candle, and yearly. So, like, all candles represent a time frame, and they also represent price action. A green candle opens at the bottom, closes at the top. A red candle opens at the top and closes at the bottom, signifying that the price started at a higher level during this certain time frame and came down, closing at this level.
How do these candles give you an indication on when to buy, when to get out, or when to accumulate more?
The candles, there's many different ways. The candles vary in size, and they also have, some people call them shadows or wicks, but the setup of a candle, the candle is going to show you if the price is moving up and you see a large green candle, it's likely that the momentum will continue. If you see the same large red candle, is going to give you an indicator, just one candle at a time. Now, we group these together and see patterns, and those patterns are more reliable. However, you can read candles just by one candlestick will tell you, especially if it's a large candle. Those are called Moribozos. And so those Moribozu candles are very good indicators of a continuation of a trend, whether that be up or down.
Are you primarily focused on the charts, or do you actually drill into the companies to see if they're profitable? Do you look at their balance sheet? Do you look at their income statements, their cash flow? Are you looking at any of those other indicators?
Yes, all of them, actually. The cash flow, the balance sheet. I want to know their return, ROE, their return on the asset, ROA. I have to see how much, if they have debt, if they're profitable or becoming profitable, if someone has made an offer on the stock. These are things that are crucial to know. We call this our due diligence. And these are the things that the Barbers of Wall Street are going to be teaching students. We're teaching and helping everybody understand how to dig into a company. Don't put your money, this is your money, so you want to take it very serious, and you don't want to just put your money into something because somebody else is doing it.
At what point do you make the decision to jump into a stock? After you read the chart after you look at the income statement and the balance sheet? Is there any time where you think, with your gut, I'm jumping into this?
I don't move on stocks with my gut. So,
Okay.
no, my gut, your gut will get you broke. So sometimes you can have an intuitive feeling, but we really look for confluence. And confluence is going to be the all of the indicators. You see a trend, you identify the trend in your candlesticks. We've got MACD confluence showing that the signal is crossing over and diverging into a profitable volume or movement. You got to have the volume, the momentum, and several other things have to line up before I enter a trade.
Question: penny stocks or blue chips?
Man, for me, it's penny stock.
On a penny stock, when you look at the income statements, they're all losing money. So why would you invest in a penny stock versus a blue chip?
We're not investing, we're trading.
Trade.
So when we investing is holding.
High risk, high reward?
Yes, high risk, high reward. But actually the risk reward is actually better for you if you're a retail investor and have less money. These blue chip stocks are hundreds of dollars per share. A penny stock, all you need, if a stock goes from 10 cents up to 11 cents, that's a 10% gain on your money.
Tell me about your interest and your group's interest in crypto. Have you made any moves in crypto?
Yeah, we've made money together in crypto.
Full disclosure.
Yes, we have. I actually know a crypto millionaire, man. I cut his hair. And it's James. What's up, James? But I'm sorry for putting you out there like that. But anyway, James doesn't know anything about trading. James bought I think he put $800 to the side and sprinkled them like $40, $80 and he hit in 3 of them. One of them went up. It was like 100,000 each. He sold that, bought something else, and then now he's 1.1 up. You know, nicely. And he's actually one of my students for training. He's killing it, man. Yeah. So I can't knock crypto at all. But what we want to do is take a more standard approach from like trading perspective. Right now, we're going to teach and endorse crypto on the Barbers of Wall Street. In fact, I'm trying to organize some things right now where we have a channel for crypto traders.